What are business taxes? Well, in this video, I want to talk to you primarily about income taxes, but there are other types of taxes to which a business is subject, including employment taxes, or what we call FICA taxes, excise taxes for specific types of goods, and then property taxes, taxes on the value of property owned or possessed by the business. So to start with, there are generally two tax regimes applicable to businesses. Businesses are either taxed as a partnership or as a corporation. In some instances, the owners or managers of the business can choose to which regime they are subject, whether they are taxed as a partnership or as a corporation. And we'll talk about that a little bit more in a second. But to begin with, let's look at these two different taxing regimes. So to start with, corporate taxation, that is, if a business entity is taxed as a corporation, the business entity can either be taxed under subsection S of the Internal Revenue Code or subsection C. You've probably heard the expression S Corp or C Corp. Well, both of these are corporations. That is, the entity form is maybe a corporation. What they are saying when they say S Corp or C Corp, they're saying whether the entity is taxed as an S corporation or a C corporation. That is, so it is a tax classification in that regard. So what's the difference? Well, to start with, a C corporation, or corporation taxed under subsection C, it pays taxes very similarly to the way an individual would pay taxes. Revenue comes in, expenses go out. If there are profits at the end of the year, the entity itself is subject to taxation. It pays taxes at a given tax rate. In the United States, the corporate tax rate is currently 21%. Okay, but again, that changes over time. That is, Congress routinely changes the applicable tax rate to corporations, but currently in 2023, it is the 21% flat tax rate for corporate profits. S corporation status is different. This is a flow-through tax status. So basically, profits come in, or revenue comes in, expenses go out, and then if you have profits, those profits, or if you have losses, those losses are distributed, or they flow through the entity to the owners of the business, generally based upon their particular ownership interest in the business, or based upon some special allocation made to those owners. But regardless, any profits or losses of the business flow through and are reported on the income tax return of the owners of the business. Now, the business itself does have to file an income tax return to demonstrate the revenue and to demonstrate the expenses that went out. And this is an informational return. The actual amounts received by the owners as distributions or dividends is reported to the individual via a Form K-1. This is very similar to how a partnership is taxed. Again, the profits or losses flow through the entity to the owners of the business. There is one notable difference, however, between a partnership and an S corporation, and that has to do with FICA taxes. FICA taxes fund Social Security and Medicare. They are also known as payroll taxes. Now, these taxes are paid by the employer and the employee together on wages of the employee. So a certain percentage of the employee's wages are withheld from the employee's paycheck, and the employer matches those wages and turns that over to the federal government as FICA taxes. Now, with that being said, an individual's wages, their earned income based upon activities provided to the organization, are taxed. Passive activity, that is value received as an owner of the business, passively, not for services rendered, but because of your status as an owner, that is not subject to FICA taxes. So in an S corporation, you can oftentimes separate some portion and say, if an owner of the business works for the business, that salary that they receive will be subject to FICA taxes. Any additional amounts they receive that flow through the entity that are basically profits of the business, that are simply flow through and distributed to the owner of the business, those are not subject to FICA because they are considered passive income simply by virtue of being an owner of the business. With partnerships, this is not the case. You can't be an employee of a partnership that you own. You can work for the partnership, but you are treated as an owner for all intents and purposes. So all of your income is considered to be active income, that is, it's subject to FICA. So this is a big difference between the partnership and the S corporation taxation, even though they're very similar in the nature by which profits or losses flow through the entity to the owners of the business. Okay, now generally the owner of an S corporation or a partnership, the funds that they receive are taxed at the personal income tax rate, where C corporations or entities taxed as a C corporation, because oftentimes partnerships can even elect to be taxed as a corporation, as an S corporation, or as a C corporation rather than as a partnership. But in that scenario, if you choose corporate tax rate or are subject to a corporate tax rate, the entity itself will pay taxes at a 21% tax rate, and any distributions of additional profits after all taxes have been paid will again be reported as a dividend, as we say, on the individual's income tax return. So in a nutshell, this is how business taxes work in the United States.